Hey everyone, welcome back to our channel. Today we're diving into March 2025 numbers from the Toronto real estate market. And I'm not going to just list the numbers, I'm going to show you what these numbers really mean and what most people, including many agents, are missing out. We're going beyond the headlines so you can understand not just what's happening, but why it's happening and what's likely coming next. Let's start with the overall picture. In March, we saw 5,011 homes sold across all property types. That's a 24.1% jump from February. But before you think we're back to a seller's market, let's keep it real. We're still 23.6% below last year's level. Average price in the GTA came in at $1.09 million, up 0.8% from last month, but still down 2.5% year over year. This bounce in sales is seasonal, not structural. Buyers are returning not because of excitement, but because many sellers are trying to accept the reality of this market and price their home more competitively. The real question is, where's that activity concentrated? Let me break it down. Detached home sales surged 26.3% month over month, but are still 25.5% below last March. Average prices dipped slightly, down 0.5% from February and 1.9% year over year. So what does this mean? Detached homes remain price sensitive. Higher carrying costs and tougher stress tests are forcing buyers to negotiate harder. We're seeing activity, but only where sellers show flexibility. This is especially evident in the 905 area, where excess inventory is creating pockets of buyer leverage. Semi-detached homes are interesting this month. Sales jumped 36.2% and prices rose 2.9% month over month, making this the only major category with positive momentum on both sales and price. This segment is benefiting from flight to value. Buyers who can't stretch to detached homes are seeing semis as the best blend of land ownership, space, and relative affordability, especially in urban cores like Eaststroke and Leslieville, where inventory remains tight. Townhouses saw a 28.4% rise in sales, yet prices edged down 0.4% month over month and are off 3.4% year over year. Townhouses are acting as a buffer zone between freehold and condo markets. Investor demand is soft, but end user demand is steady, especially for newly built freehold towns in the 905. However, price pressure is real in areas where there's too much product released at once. As you guys know, condos are the most vulnerable segment right now. Sales rose 14.6% from February, but remain down nearly 24% year over year. Prices also declined 0.9% month over month and 2.6% year over year. We're seeing a clear investor retreat in the condo market, driven by shrinking rent yields, higher condo fees, and better value in low-rise. The only exception, boutique or well-managed buildings in prime downtown or waterfront locations, those are still moving, but only if priced competitively. So what's really happening behind all these numbers? Here's what many agents won't tell you. This market is about confidence, not just interest rates. And confidence right now is fragmented. The spring boost is real, but it's being led by motivated sellers and value-conscious buyers, not FOMO. The Bank of Canada has cut its overnight rate 7 consecutive times, and experts are forecasting few more cuts this year. That expectation is keeping some buyers on the sidelines waiting for better affordability. In addition, ongoing US tariff threats have created economic uncertainty, and the upcoming Canadian federal election is only adding to buyer hesitation. Many potential home buyers are now taking a wait-and-see approach, unsure of how these external factors will impact the housing market in the months ahead. Meanwhile, the flood of new listings, especially in the 905 area, means buyers have options and leverage. So what is your strategy as a buyer or a seller? If you're a buyer, now is the time to negotiate strategically, especially in the detached and condo markets. Look for properties that have been sitting for maybe 20 plus days. That's where the seller's psychology starts to shift. If you're a seller, if you're pricing based on 2021 or early 2020 comps, stop. Today's buyers are more informed and conservative. Your best strategy is to price slightly below the market to attract urgency and drive competitive offers. So that's the real March 2025 market breakdown. The stats are just starting point. The strategy is what wins deals. If you found this valuable, hit like, subscribe, and drop a comment below with what you're seeing in your own neighborhood. We're here to help, whether you're buying, selling, or just trying to make sense of it all. Thanks for watching, and I'll see you next month with the April numbers.